Teslas are no longer expensive and are actually getting very, very affordable. Not just new vehicles, but specifically the used cars. The average price of used Teslas has fallen 19 months in a row, moving from a record high of $67,900 in mid-2022 to now a record low of $33,913 today. That's a 50% decline. Is this a disaster for Tesla investors, or is this actually good news? Let's discuss this some more. And I've got Hans Nelson joining us. He has his own YouTube channel called Hans C. Nelson. Thank you so much, Hans, for joining me.
Yeah, thanks for having me, Herbert.
So prices continue to fluctuate. People don't know why. Tesla's cutting prices. There's a whole group of consumers who believe Teslas are incredibly expensive. And then there's many who now understand that the prices have fallen significantly because, of course, this is always up on the news as well. But the interesting thing is the used car prices have fallen. So if you're a Tesla owner, you're not happy. If you're Tesla investors, some people are not happy with that. Curious to see what you think. Let's report on this news first. So the average price of a used Tesla declined 19 months in a row. It went from a record high of $67,900 to a record low of $33,000. That's a 50% decline. So you can see here, it started off in January 2019. Of a used Tesla was $55,000, and then it just skyrocketed here in 21 to 22, and then it's fallen, like even steeper decline to where it is today. How do you explain what's happening here?
Yeah, I mean, that's just a classic asset bubble. What happened in between January of 2021 and July of 2022? Well, I mean, we had a lot of money printing, and so assets in general inflated, but there was also the supply crunch with new cars that most of the other automakers had to dramatically reduce their production because of all the supply chain challenges that we were working through post pandemic. And so if the entire auto industry is selling less vehicles, then, if you just think back to a classic supply and demand curve, that means the prices of all vehicles have to go up. And, Tesla is producing cars. Their cars are sold in the same marketplace as other manufacturers' gas cars. And so, if we plotted that against average gas car prices just in general, they would really follow along basically the same overall shape. And Tesla does have the advantage of being one of the, most aspirational vehicles and brands. And so the shape of this curve might be a little bit different for them than for other vehicles. But that's just, kind of an unavoidable impact of the overall market conditions that we've been in over the last several years. But if we look at the overall trend, if you want to go ahead and pull up the next slide, the
Mm-hmm.
Tesla's mission has always been to accelerate the world's transition to a sustainable energy future. And in order for that to happen, we actually need those sustainable energy products, whether those are energy products or whether those are vehicles, to be the cheapest option in the marketplace. It needs to have better performance and it needs to be more affordable. And that's always been Tesla's goal. And so you see that they've had to kind of pursue this strategy in stages. That at first they were making the Roadster, which was a better vehicle than a lot of other comparable vehicles at that price point. Obviously it was a very expensive vehicle, but to have something that had that amount of acceleration in a vehicle that size and those handling characteristics and be electric, it was a very cool and interesting and groundbreaking product at that point in time. And they have to continue that then with the Model S, the Model X, then the Model 3 and the Model Y, that each of these things brings this technology to a lower price, higher volume marketplace. And this is the direction that we're going, even with the next generation vehicle. And as we pursue that strategy, well, the average price of your used vehicles is definitely going to fall. And so this is what it takes to, there's lots of consumers who don't buy new vehicles because they can't afford them. And so it's actually good for them to actually have access to lower priced used vehicles that are more affordable, more in their price range, and give them access to an EV technology that they've wanted for a long time, but just never had the ability to purchase in the past.
Yeah. So this slide here just basically shows that yeah, all the things you said, right? Money supply,
Mm,
the economy, interest rates went up,
yep.
and then supply chain issues. So there's this bubble, and of course that's right in line with Elon, right? He's going to we
Hmm.
had to cut the price of new car sales, so the used car sales fell dramatically following along that. But if you look at if you get rid of that bubble, we're just right in line
Yep.
with where
Right
we
on
would have been
trend.
anyways. Anyways, yeah. So
And I
interesting,
think
right? That's what's happening.
it
Yeah.
it reinforces, if people go back to and think about ARK Invest research, that they talk about Wright's law, that there's a predictable cost decline
Mm.
that you see over time, that if you produce, go from making you've made 100 vehicles total in the cars or the company's history, and then when you go from 100 to 200 vehicles, then that is a doubling of cumulative production, and there's typically a fixed percentage cost decline. Maybe it's 5%, maybe it's 10%. We'll just, in this example, say 10%, to make the math easy. So if it costs them $100,000 a car to make the first 100 vehicles, then by the time they make vehicle number 200, their average cost to produce a vehicle should be $90,000. And so we know that in the time since 2021, Tesla has produced a lot of vehicles. They have probably nearly doubled the overall installed base, and so there is a reduction in cost. This is one of the things that Jeff Lutz talks about, exactly how all this works on a logistical and in a detailed way, how these cost declines come into practice. Is they are able to renegotiate contracts with suppliers and figure out stuff to remove parts and remove cost here and remove cost there. Those are the details, but what it all ends up looking like, from a high level, is just, I've delivered 1 million cars to now I've delivered 2 million total cars, and I get 10-15% cost reduction. And so we're continuing to do that. Tesla has made significantly more cars since 2021 than they had delivered at that point in time. And so the cost of producing those cars is going to go down. And if you are selling those cars in a competitive marketplace, then you're not just going to be able to sell them at whatever price you want. There's going to be, pricing pressure that is put on you by other vehicle manufacturers. And so you pass those savings from your cost onto your consumers, so that you can sell more units. And so that's what's going on in the new car market. But that also has an impact then on the used cars. And then there's even an additional factor that plays into all that we'll talk about here in a minute.
Okay. Well, first of all, let's go ahead and talk about, is this a good thing for Tesla investors or not a good thing for Tesla investors, right? Some people think it's bad because Tesla new sales will go down if the residual values fall. And others think, no, this
Mhm.
is actually a good thing because you're going to have more sales if prices go down, both used cars and new sales. Let's hear what you think. But here's Gary Black. He says, rapidly declining residual values may also hurt new Tesla sales. You got Omar from Homar's blog saying, hey, affordable used EVs make it easier to switch EV, which is a great thing. I often see people bring up this graph like it's some horrible thing, but it seems like a natural effect of more used Model 3s and Ys entering the market. That's what you just said. As their first owner buys a new car, the pandemic was an anomaly driven by inability to produce cars. Tesla buyers today no longer have to worry about a 20% price cut as Tesla is now much closer to COGS. I expect that Tesla vehicle sold today will hold its value better than most gas cars, and as has historically been the case before the pandemic. Yeah, what's your position on this debate?
Yeah, I actually 100% agree with Omar on that. And it depends on what you mean by a Tesla investor. If there is a Tesla investor who has short-term time horizons and needs to see the price of the shares increase significantly in the next 6 months to a year, well, this is actually not great news for that person, because Gary's right to observe the fact that 2 years ago, consumers could make the decision, hey, I want to buy a Tesla. Look, not only does the vehicle hold its price, but like the price goes up. But the same was true for any vehicle. Like if you bought a car in 2020 and then you went to sell it in from 2021 to 2022, you probably actually made money on that transaction. But that was just an anomaly in time. Like that's really, I don't know of any other situation in my lifetime where you could have said that that was going to be the case for buying and selling a used car. Like you don't make money selling a used car after you've owned it for 2 years and driven it, a number of miles. Like the price is supposed to go down. That's how this thing works. But just that one market scenario is the exception to the rule. And so now people are having to refactor their purchasing decisions based on returning to normal market dynamics. And yeah, so it doesn't make as much sense now as it did 2 years ago, and that's true. And people are having to factor that in. And then also, it's harder to afford that new vehicle with interest rates being as high as they are today. So, it does have somewhat of a negative impact on new car sales today. But back to Omar's point, this is a good thing long term. We need as many EVs in the car market as possible. They need to be priced competitively. And if we see these cars, which it seems like for normal consumers that Teslas hold up better over the long term as far as a maintenance or from a maintenance and cost of ownership standpoint. So as long as those things remain true, that as long as Teslas are cheaper to operate and cheaper to maintain over the long term, then we also know that their resale value will be higher than a comparable gas vehicle just because the car is more valuable to the consumer. And some of that does, come down to a consumer education thing that people actually need to understand that that's true in order to perceive that added value in a Tesla compared to other vehicles. But it's something that we should see over time.
Exactly. Yeah. A used Tesla is so much more higher quality than a used gas car.
Hmm.
You don't have to worry about like things breaking, carburetor, transmission. I've had
Yeah, has
everything.
the timing
I've had
chain
everything.
been changed? How often were the oil changes done? Did they use high quality oil when they
Yeah.
did those changes? Have they used the correct grade of gasoline the entire time they've owned the vehicle? Like, a lot of those
Yeah.
things are eliminated. The one thing that you don't know is, what habits did this person have for charging? That is going to have an impact on
The
the battery
battery.
health. But,
Hmm.
at least with the battery health, it's a lot easier to look at a used Tesla and assess
Yeah.
what is the health of this battery instead of with a gas car. You're like, I don't know. Like, I'm going
No
to drive
idea.
it. It feels okay today. And then, oh, I'm going to discover, a month from now, all these
Mhm.
issues, which is never fun. And, anyone who's experienced purchasing used vehicles any number of times understands how unfun that can be.
So as a Tesla owner, I do am I'm sad that the value of my Tesla has fallen
Mhm.
significantly, and I can't
Yep.
resell it at the same price as I thought I could sell it a year or 2 years ago, 50% lower. Big hit. But as a Tesla investor, I'm actually very, very happy, right? Because I want Tesla prices to fall. And I know that like you said, short term margins are going to take a hit. So the stock is flat and suffering big time. But all these great Model 3s and Model Ys out here. So here's a great way to look at it, Ogre Sep. Next year is going to be the first year that there's going to be 8-year-old Model 3s on the road. And it's going to be the first year we see 5-year-old Model Ys. The average used price will go down. And like you were just saying earlier, these 8-year-olds and 5-year-old Model Ys are very good quality. They run
Hmm.
exactly the way now. They're actually they're as, like a Apple computer. I've got an Apple computer that is 12 years old. 12 years old. And I was telling my wife, let's buy a
Yep.
brand new one. And she's going, why? Like,
Mhm.
do you not know this is 12 years old? And she does not know because they upgrade all the software is just as good as a new one.
Mhm.
I'm shocked. I'm really shocked at that
Yeah.
computer. The same thing's happening with these Model 3s, Model Ys. You won't be able to tell the difference between an 8-year-old Model 3 pretty well. I mean, like it's just so good still.
Yeah. Very minor differences. Yeah, and that's, this is something that people definitely need to understand if they are trying to predict share price based on used car
Mm.
prices, is that I think that the price of used Teslas is actually going to fall faster than the price of new vehicles as we move through the rest of this decade for two reasons. One, just like
Wow.
Ogre pointed out, like if we look at other vehicle manufacturers,
Mm.
GM's been making cars for
Yeah.
100
100
years.
years.
Ford's been making cars for 100 years. Like the average price of their used vehicles is based on a fleet that the entire market is
Mm.
saturated with and decades worth of vehicles that are being sold and resold in the used car market. Tesla
Mm.
only has a few years worth of selling cars in any meaningful volume. And so every year further that we get away from the launch of the Model 3 is now like you can't go buy a 20-year-old Tesla. I can go buy a
Right.
20-year-old Ford. I
Mhm.
drive a 20-year-old Honda. So, like, these are differences between the Tesla used fleet and other vehicle manufacturers' used fleets. And so I expect it will take time. One of the great strong points that Toyota has is they have an incredible brand
Reliable.
in the
Yep.
used car
Yeah.
market. And I think that over time,
Yeah.
Tesla is going to overtake Toyota as the premier used vehicle that the market wants to
Mhm.
purchase, which will actually then, once we reach that point, it will help to stabilize and lift the price of used Teslas overall. But moving forward, as you know, as the mix, and this is how people need to think about it, like when Ford sells however many million vehicles they sell in a year, we'll just call it 10 million vehicles this year, but they have an installed fleet of 100 million vehicles. Well, they're selling 0.1% of their total installed base. When Tesla next year or this year, delivers 2 million vehicles and they have a fleet that is
6 million.
5 million vehicles roughly to
Yeah.
set, growing, then that's a huge percentage of the overall fleet is comprised of new car sales. And so new car prices have a much higher outsized impact on the
Mm.
overall
Mhm.
average selling price, whether used or new in that marketplace. So in that scenario, when we go to the next generation vehicle and you can buy a Model 2 eventually for, say, once we reach volume, roughly $25,000, well, that is also going to have a very large impact on the average sales price that you can
Mhm.
transact a used Model 3 or a used Model Y. Um, and so and then when we throw in on top of all of that, the fact that now we just have this $7,500 tax credit that dramatically lowers the new car sales price, that especially when it's at point of sale, that's basically going to make it much harder now to sell a used car at that same price. And so this
Hmm.
artificial reduction in new car sales price based on the IRA tax credits is going to have a massive downward pressure
Even more. Yeah.
on used car sales.
Which
And so
is
like the
amazing.
average used
Yeah.
car thing is all going to go lower. And this is
Even
good
lower.
for accessibility. Like we said earlier,
Yeah.
more people need to be able to afford a Tesla. And, there's lots of buyers in the car market who can't afford anything more than five or $10,000.
$10,000.
And right
Yeah.
now, those people can never afford a Tesla and they won't be able to for probably another 5 to 10 years until we have used vehicles
Mhm.
that actually can be sold at those prices. So, yeah,
That's
I
a
mean,
big,
that's
big
kind of
deal. I
where we're
mean, we
at.
know that butts and seats is what sells Teslas. Once somebody buys a Tesla, they're like 95%, like they're the highest of all any car manufacturers of rebuying in the brand loyalty.
Hmm.
It's unbelievable. So they'll keep buying. So let's take a look at what's happening to the new car sales. Here's a Model Y. It's now a new car, Model Y, today. You can buy it for $27,410. These are the inventory prices. Tesla is trying to promote this. All incentives included. In Colorado, they have state incentives on top of the federal. And so it's
Hmm.
just very, very shocking that there's actually a chance to buy a
Yes.
brand new Tesla. Model Y at this price point. Um, and then, of course, just today, Tesla's increased the Model Y prices. They always make these little changes, but in Germany and in certain other parts of Europe, it looks like that they've extended by 2,500 euros, which is significant for all versions of the Model Y. And it's going to extend to others and all that. So, what's your thinking about what's happening here?
Yeah, so I think that, just to reiterate a point that Rob Maurer makes many times, is that Tesla handles their supply and demand at a local level. And so just because we see some price reductions here, or there's incentives there, that Tesla's trying to balance where they're shipping vehicles and what the vehicles are priced at in different areas, based on all of those factors. And so while we do see some inventory prices or some price reductions here in the United States, that doesn't mean that in other geographies that we're not seeing these price increases. And so, you do have to also factor that into account, that the average sales price of a Tesla across the world is not going to necessarily be changed at a 1-to-1 ratio based on changes in prices here in the United States.
Yeah. And then the other point here, Bradford just pointed this out, is there's actually Giga Texas is now producing quite a bit more. So he said that the first 5 weeks of this quarter, Q1 2024, Giga Texas produced, it said 22,000 Model Y. He since then did a correction saying it's actually not 20,000, it's 18 to 20,000 Model Ys is what they did. But the first 5 weeks of each, for each of the other quarters, the previous quarters, Q4 last year and Q3 before that, they only produced 10 to 12. So they've doubled almost, or at least, 10 to 12 to 18 to 20 new Model Ys. This is why Tesla's cutting the Model Y prices. They're able to produce more now. What you're thinking about that concept?
Yeah, I mean, obviously, if they can produce, we'll call it 80% additional units over that same period of time, they're going to get a lot of economies of scale out of doing that. And so the cost of goods sold on those Model Ys produced in the last 5 weeks is going to be lower. And so they can afford to sell these at a lower price and still maintain the exact same margin, just on a larger overall base of units. And so they'll actually make more money by reducing the prices a little bit, but shipping many more vehicles, as long as their cost of goods sold, outpaces their product, or the cut in the overall price point. And so we'll have to kind of see how the quarter shapes up, but this looks like really positive numbers, because that is a massive increase quarter over quarter from Q4 of 2023 to the beginning of Q1. And typically the beginning of a quarter is going to be kind of a lower production standpoint. So to see them rolling into the beginning of this quarter kind of on full blast with production is really good to see. The one caveat that I think we also need to take into account is the fact that with Model 3 refresh happening right now, that it could be that they're basically kind of leaning harder into Model Y sales right now to offset for the Model 3 sales that they have had to pull back while they're changing over to the refresh. And so, but even that would be good, because a lot of people were anticipating that this would be a down quarter for Tesla because of the Model 3 refresh. And we could see, almost flat overall sales in Q1 here in the United States, based on their ability to increase the Model Y sales, which would be great news, because then if we can go into the back half of the year with really strong Model 3 sales and really strong Model Y sales, then, I think there's a lot of upside based on the fact that Tesla didn't put a lot of strong guidance out on how much to expect this year for unit sales. That um, if they're able to manage, like, there's not a whole lot of programs that we know of that are in the works for this year that should cause a hiccup in supply. And so if they can just kind of keep cranking out at this roughly 500,000 units per quarter at this point in time, and then grow that, incrementally into the end of the year, we could very well end up with over 2.2 million units sold this year. And I think that would be a positive thing, for expectations moving into next year.
Nice. Love it. Okay. So a couple things. One is that the prices of the Tesla cars are falling, new cars. But there's actually stronger and stronger belief that the margins will maintain or even rise because their ability to continue to lower the cost of goods. And that's actually still good. But on the other hand, now you got the lower cost of the used car sales. There's going to be more out there. And so there's going to be a day that we're going to wait for like actual additional margin coming from all these premium services that Tesla can sell to these cars because it's just software updates, right? So as soon as you get more FSD uptake, once you get even the premium entertainment, things like that start rolling out, then it truly does. This is something that Tesla is able to do that other car manufacturers don't do, is charge extra after the car is rolled out. On the other hand, the other cars manufacturers make money on when the cars break down. They actually get to make more money by selling the parts. So, but anyway, so something for us to keep looking out for in the future.
Yes,
Thank you so much,
absolutely.
Hans.
And
Yeah.
that's also going to be something that's true on these used vehicles. Just to continue that point a little bit, that a 5-year-old Model Y will be compatible with valuable software today, but also a
Yes.
year from
Yeah.
now, 2 years from now, 3 years from now, 4 years from now, 5 years from now. And so
Yes.
that creates an opportunity to sell something to the consumer of that vehicle, even if it's a second, third, fourth owner, and
Yeah.
actually generate net new revenue to the company based on past sales. And I know that a lot of people just kind of discount Elon when he starts talking about these things, but there's going to be a moment when they start
Mm-hmm.
generating
Mm-hmm.
significant additional high margin SaaS revenue from these vehicles. And because they are regardless of what happens in the rest of the auto market as far as software is concerned and who wins and what, Tesla will always have access to their entire installed base to sell
Yeah.
high margin SaaS
Yeah.
revenue software to. And as this fleet grows from 5 million
Mm-hmm.
today to tens of millions, and then over the long term, hundreds of millions of vehicles, even if we're only producing 10 million vehicles a year in 2030, it
Right.
doesn't take that long before you have an installed base of over 100 million total vehicles. And that's a
Mm-hmm.
very large number of people that even if you can sell them something that's only $30 a month on
Yeah.
average across that entire fleet, those turn into big numbers real fast.
This is subscription. So it continues.
Yep.
Yeah. It's just completely changing the business model. All right. Well, we're looking forward to all that. Thank you so much, Hans. Follow him on his YouTube channel, Hans C. Nelson, and on X. Thanks, everybody. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.